Oh, what an exciting day, right? Plug Power up an additional nearly 15% already this morning after, oh, that's right, you already know what happened yesterday when they jumped over 20%. Well, what's the reason for it? Obviously, this is quite a big movement in a short period of time, so we'll go over the reasoning for that and see what's going on here. So, Plug Power, naturally here, you gotta love it. They upped their planned sales. Originally, they gave a 2024 estimate of $1 billion, and they've upped that to $1.2 billion in revenue by 2024, which is a massive, massive growth rate. All things considered, we'll get into that and the likelihood of that outcome as we kind of progress here. So Plug Power, if you don't know, is a hydrogen-based company. For the most part, hydrogen power is their main source of revenue. It's how they make their revenue. And hydrogen being a clean fuel source, it has a big potential in the at least relatively near future of doing some great things, right? Hydrogen, as people push now for clean energy as opposed to your traditional fossil fuels, hydrogen has a big potential here. It's used in many ways. You can use hydrogen power, right? There's a lot of ways you can use it, and I think it'll become a big part of the economy, really, when we talk about coming up here in the future. I really do think it will. So investors like the $123 million purchase of 2 hydrogen companies that could turn the market of fuel cells into major suppliers. Plug Power bought gas producer United Hydrogen Group for $65 million and Geiner ELX, which makes electrolysis machines that generate hydrogen from water, for $58 million. Really, this expansion entirely meant to boost the potential that they could have as far as revenue is concerned, right? They're adding new sources that can help produce more revenue, and it makes a lot of sense. Very good acquisitions, in my opinion, for them, and I think it'll really help them expand their production. Andy Marsh said the deal will drive down fuel costs and give customers a greener source of hydrogen, much of which is currently generated from natural gas. So the whole goal, obviously, is to make it clean as opposed to natural gas-based. And are a key part of companies' plans to achieve the $1.2 billion in revenues by 2024 from just $230 million in 2019. That is big growth, right? You're talking about 5 times the growth in a matter of 5 years, which is, that's quite the lofty goals, If hydrogen becomes a major source of energy for the world, supplying it could become a larger segment of Plug Power's business than fuel cells, says Marsh. Fuel cells obviously the big portion right now, but just hydrogen in general, selling just the hydrogen itself could be big for them. Fuel cells used for obviously like a lot of big trucks, electric vehicles, stuff like that. That's where hydrogen fuel cells really are important. So, in my opinion, I think there's a lot of good reasons for this. So this is a company that already is really partnered with companies like Walmart to provide hydrogen. These are major companies that they're partnered with. And I think as we progress and talk about clean energy, we all know what companies do, right? I hate to say that they pander, but they pander, right? They want to do what will potentially get them interest from other new potential clients. And it doesn't seem necessarily the right thing, but a lot of people do really care about what the company does as far as any sort of initiatives, as far as sort of green climate, social concerns. Which is stupid. You shouldn't necessarily be that concerned when you're talking about a place you're going to purchase goods at, but some people are really concerned about that. And if a company going to green fuel as opposed to what they're currently doing can bring in a new client base, they might go with it. They might potentially just decide, let's just make the switch, not only for environmental sake, but just for the potential of growth in business. Most of the part, companies do it for growth in business. They don't do it for the environment. Just gonna be honest with you. They want to look favorable to the public. So, but also today we're up yet again because of a big growth. H.C. Wainwright, analyst, gives the price target to big. Plug is a clean energy juggernaut and the stock price target has moved from $6 to $14 now per share. Wow, that's quite a big jump for an annualized price target. Quite a big jump. But they also plan on obviously growing what they have as far as EBITDA is concerned. Pretty exciting. I mean, things are looking good for the company. I can't lie to you, but $14 price target's a little excessive in my opinion for an annualized price target. I'm a very long-term investor in Plug Power, in my opinion. I think that this is going to be a lot of benefit here. I was really hoping for another dip down so I could purchase some more shares, but we'll do what we can. Looking at the revenue, obviously we need to take a look if this is an actual feasible outcome, right? So I think before the $1 billion estimate was 100% feasible, right? If we talk about this growth from 2017 to the trailing 12-month number of 250 million, well, that's quite a lot of growth. It's not necessarily the rate of growth that you would expect necessarily to reach that $1 billion mark, though. But with recent initiatives, I think that's absolutely a good possibility that they go ahead and raise that. Especially with the two new acquisitions, I think that $1.2 billion number is certainly possible. And I think really the market is only going to grow for them. The hydrogen market's only going to grow within the next few years. So I think that's where they get that estimate from. And the 1.2 billion, I certainly do agree with. The concern obviously comes with net income for this company, right? I think the concern probably is going to be with EPS. And if you look here, we look at the estimates, obviously. From an EPS perspective, obviously this is a negative earner right now. Last year posted negative 36 cents. This year expected to post negative 35. But next year expected to post a negative 23 cent number, which is a very big positive growth. Very positive growth. And it's something you really like to see out of a company that's starting to go into a growth phase. They usually start off as negative earners, and they find their way. And really, with these acquisitions, they have ways to produce this hydrogen at cheaper costs. So I really am pretty hopeful that they'll be able to reduce that EPS number. I do agree that it's certainly a possibility. Now, as far as the revenue is concerned, we have to look at the estimates as well to see if it's even feasible. So currently, they're expected to grow revenue 24% this year. But next year, expected to up it to 30% annualized growth. Average estimate of 381 million. Now, if they manage to keep that 30% growth rate, which, I mean, I think is feasible. I think it's certainly feasible. We can do the math here real quick, and this is obviously not updated as of yesterday, but we'll keep that. We'll keep the annualized growth rate at 30%, to be fair, and let's just see where that puts us, right? So if we're going off next year's estimate of 381.7 million, technically, if we're going to be doing this by 2022, we should be expecting 496 million, which is cool. And then by 2023, we should expect 645 million. 2024, you'd expect 838 million, based off those current 30% growth rates. Now, I think that obviously is a number that's going to grow given the current circumstances and current acquisitions. So, off of these current estimates of 30% growth rate, you see they would fall short. But let's just say they go from this 292 million and instead had a 40% growth rate, which by next year is 408 million. 2022, 572 million. 2023, 800 million. And 2024, $1.1 billion. Now, I think that 40% growth rate is certainly a lot more feasible when we talk about the acquisitions they've made. So I think a $1.1 billion estimate for 2024 is my opinion on the matter. I think the 1.2 it's definitely high, and I appreciate what they're doing, but I think 1.1 is a lot more feasible. But I do think they certainly, at a minimum, they're going to hit that $1 billion mark. I absolutely think they will. Now, stock levels are high, but if you think about it, with hype like this, it's hard for this stock to jump down at this point. It's going to be hard to see it get anywhere near its 52-week lows of $1.86. It's going to be very high, very, very hard to see that. I think the stock really just continues to go up from here. I think there could be some stagnation for a little while, but I think the stock's on a really going to be on a really big bull run, and I'm already up 200% on my shares. So to be fair, I really would like this to dip down so I could buy more, but I might have to eat it and raise my cost basis. Regardless, I like this company. I do like what they're doing, and it's one I'll be monitoring for quite a while, and I'll be holding for quite a while. Definitely a very long-term investment with this company. If you're looking, you should be looking to hold this company for at least 10 years into the future, because I'm really, really excited about the potential that this holds. So really hope you enjoyed this, and have a good one.